8:30 a.m. This video will be very quick. As you can see, less than 20 minutes. So I'll be going short right here in that inefficiency. So I placed a rule-based stop loss just above the CB, which is the sell side imbalance by said inefficiency. So the take profit is at this low. The reason I had to speed up this video is because the real video is almost 30 minutes or even more, and I just want to do it so fast. It's something that will be beneficial for you and for I, because it will help me do other things at other time, and also it will save you so much time of just sitting still with static price moves. So I'm watching that inefficiency, and I'm okay if I get stopped out here, it's fine. Okay, but I'm watching that inefficiency right there. So right here is about. So once an inefficiency gets disrespected this way, you have to wait for it to get overlapped to the downside, even if it gets stopped out. But based on this rule-based stop loss, I feel comfortable because once I use the rule-based stop loss, it's easy and more forgiving for me to, okay, well, I follow the rules even if I get stopped out. But if I did not follow the rules, it's going to be very difficult to deal with. So that was, look how close it was. It would have been so fried. At this point, I was like, okay, well, let's see what's left. If I'll be taking out, then so be it. Because I was like, okay, like going this deep, because most of my entries was immediately I go short, it just keeps running, right? But this was different. So this is the regular 50th minute of ICT macro. So right here I was like, okay, well, I'm out. I almost even ended the recording, but that was a high. It never went beyond that. So, and I was watching the consequent encroachment of this tail. If the body want to close below that, and I want to see expansion on the next candle, so that's what I was thinking. And watching that was the hit I had to take. Look how close it was. So this is the benefit of having a robust stop loss right here. You can see it didn't come close. This was the CB and this was the high. So I want to see price wanting to gravitate lower, and that's what I was watching. So I told you this inefficiency has to get overlapped the second time. So before I get confident, if I even want a pyramid entry, even I wanted to short here, but that would be too much risk because I need to see a confirmation. Well, for me to be able to, that's the level. You have to do what is comfortable by you. I need a confirmation for me to know that, okay, this is a sustained move lower, and then I can add more entries, because I was initially aiming for 1 million shares, but I just went 600,000 based on how I felt. So this take consequent encroachment, I'm watching it very closely. So that was an immediate rebalance. It didn't completely touch it, but that was like, you can see the rejection. So I've been talking about immediate balance in my top-down analysis and also in some of my videos. So this is how immediate balance should act. It should not get a second repricing. For high probability ones, it should not come there the second time. This didn't touch it completely, but this is the kind of signature you want to see during an immediate rebalance situation. So this CB, I'm watching for it to get overlapped, coupled with this BC. If the low of this BC gets taken out, it means this is not an ideal BC. Just like this CB, if the high got taken out, it wasn't an ideal, even though it might still go lower, but the ideal one should not get taken out if you want to use it as an entry. So the low of this CB will start watching. If it gets taken out, that's a plus confirmation for me that, okay, price is really gonna go lower. And right there, it was taken out. This was the PC here. So I knew that, okay, anybody who went long using this inefficiency and placed the stop loss at the low will be what? Will be taken out, which means price is wanting to go lower. So I was watching how price wants to close at this level. But in my mind, I'm still watching these two inefficiency because this is like a balanced price range. If you go on 3-minute time frame, it's like price sell side delivery and buy side. So balanced price range is a strong array, just like the immediate rebalance and institutional order flow introduced. And the signature of a balanced price range is that you don't want to see its main threshold get traded to. Sometimes it gets traded to, but body should close above the main threshold, the consequent encroachment of the balanced price range. That's the midpoint. Even if wicks go below it, the body should close at the consequent encroachment, which is the midpoint. So that was what I was watching. So if your body close below the midpoint of this down close, up close candle, back and forth, then I know this balanced price range has failed. It's a plus. So this array, once it's failing, it's a plus for me to know that, okay, I'm right, I'm on side. But once it begins to support and going against me, I might want to trade my stop loss. So that's how I handle the trade. So right here, I was ready to take in a partial in, but I was waiting for just this very little inefficiency up here. That's what I was waiting for. I wanted to be perfect, so I was waiting for that. If I will get that, Even when I wanted to take a shot, I was still waiting for that. So that's what I'm watching very closely. Here it's very important for me right here. So you could see how price reacting, and I was still watching it. I was waiting so patiently, waiting. So I really could have just, okay, well, let me divide this into two. Since it's 200, I'll take 100 here. If it goes high, I'll take another 100. I used to do that, but this time around I just became so greedy. I wanted to take the whole 200 at the best possible entry possible, and let's see if we'll get the entry. Now the price was going, I was like, oh, so I really just missed the entry, but no problem, it's all fine. So this is the balance price range. You can pause the video, you can rewind it real quick. Now the balance price range on 3 minutes. You will see that on that time frame, you can see we'll have a down close and an up close separated by only one candle. This is a balance price range. The midpoint, once the body close below it, that becomes a plus. So you can easily rewind the video, pause it, watch it in that down close, like it was one down, one in between, and an up close overlapped it. So sell side delivery and buy side delivery, it's balanced. The midpoint, if a body close below the midpoint, it means we'll be going lower. So right here was another opportunity for me to get in, but I didn't use it. Why? Number one, if I had gone to the 3 minute time frame, there was actually a fair value gap that was traded into. I didn't see that. It went up into the fair value gap. If I had seen that, I would just right here. That was the last chance. I didn't get it. If I had worked on the 3 minute time frame, it would have been easy for me to get. But here I was waiting for this inefficiency above my entry. That was what I was waiting. So this is like a phantom trend line. I've talked about it so much in my analysis and in my video. This sell side liquidity. So this is a pattern in retail. When they say, oh well, keep buying as you touch the phantom trend line. No, you don't do that. Price will attack sell side below that phantom trend line. So I'm still looking at 3 minutes. If you look at it now, this is the balance price range. A normal one should not have this kind of signature. Right here I was like, wow, good, I will be putting it, and I realized that I missed the entry here. You can see that high, it entered that fair value gap, this high. That was when I knew, man, I missed this entry already, no problem. So instead of me cursing about the entry, I simply just placed the order for, I was trying to get a buy limit. I want to press the limit where I'll be having a buy limit, but at the same time I'm still open. If I had come into this inefficiency, I want to go short some shares. Handles is what the indices. This inefficiency was how, if I will get a second chance, if it pops into it. So if you like the video, you can just give a thumbs up, comment your thoughts and questions, subscribe for more, ask your questions, suggestions. I'm open to. So I'm still watching that inefficiency. I'm watching very closely. I don't want to chase price. This will be acted as a inversion fair value gap. An inversion fair value gap, I used to like the up close candle for a bearish inversion fair value gap. With experience, that those up close candle might want to drop price if it won't. But if it is a very, very low resistance liquidity one, that will not happen. So you can see the balance price range on 3 minute time frame. You can see that it actually, this candle is almost closing even below that. So it's like, oh, this is not a real balance price range. You can use that as an inversion bullish balance price range. So that's inversion of PDRA. I was not worried about that. I was placing a limit. So this is a limit here. So I'm taking a partial off here when price coming to this level. But then I was thinking to myself, well, since I missed the entry right there, I got another one. So that was the opportunity I used. Since this was a break-even gap, I'll be treating that one as a break-even gap. This is an institutional order flow entry deal. It actually went high, but I got the entry at 150. So that's what I was watching very closely. So it's very important right here. I was watching it really close, and this is the sell side liquidity. So you can see that price just traded to it. So I don't want price to be coming as much as here anymore. Now greed came into place. I should have just let it go at here, and then I traded it. If I had let it go at here, I would have been better. But I was thinking, oh, I want to be perfect. Right here I would have been booked out in profit. But I recycled my pain. I didn't get out on time. So that wasn't a good thing. So this is a lesson, normally I would have got but I just, okay, since I missed those entries, let me get more profit. I changed it from 400 to 500,000. And why I did that is because with experience I've learned that once I take more partials out, it's actually better. Right now I realize that, oh, you just fucked up. So I was trying to move it up if I would just get a little bit of energy, but nope, price had to go and retrace. But I followed the rule. I trod my stop loss immediately. Normally it would have been partial. If you know my videos well, partial then stop loss. I didn't get a partial, but I have to do this stop loss to prevent further risk exposure. So risk removed and the cost is covered for the commission. So look at that entry. That's beautiful, right? That one would have been perfect, but no problem. So this is how I forgive myself. If I miss that first one, I try to get the next one. So remember to subscribe, ask your questions, give your suggestions. The video will be coming to an end as soon as possible. And so you can see how I had to wait so much. You can see that I could have just been out if I had not just shifted that. Like, that was great for you. So it happens to me sometimes too. All these things, it wasn't comfortable sitting in here because it's like, oh, I can come in here. But if I had taken out 500,000 from 700,000, like, man, this is just 200,000, it's nothing. So I was just, but I saw an inefficiency here, so I drew it. And instead of me just taking this little, I even know that, okay, it will want to trade. Once you see an inefficiency beyond a low, like an inefficiency that is inside a sell side liquidity, you can see that I want price to really gravitate into this inefficiency. So I'll even increase my potential again. Since I missed this one, experience made me know that price will want to rush in there, so I'm not scared anymore. Well, I still knew that I could have gotten out here, even if I knew that, okay, price might want to come here, but I could have just gotten out here. So next time I will not demand too much of perfection, because that was the same thing I demanded and I missed the entry, and my exit I did the same thing. So this is a phantom trend line. You see, I told you the same thing. This is a phantom trend line, the sell side liquidity period here. So this diagonal support, it's fake. Price will want to run into there. So this is like, okay, good, your stop loss is safe, just leave it there. No, price will eat into that. It's so seductive for price will want to draw into it. It's like attractive, it's a magnet for price. So much liquidity. So it just took out a high into this inefficiency. All this would not have happened if I had taken a partial. I would have been very comfortable, and I missed it. Right now I knew I could go short, but I refused to do that. Why? Because I didn't take a partial, and going short will further increase my risks. So that was the two things. I missed the partial and I missed a better entry. That short would have been what I'll take. I missed it because I had to punish myself not to take it, because what? I didn't get a partial. So that's why I shifted the stop loss and the buy limit below the inefficiency, because I know now price will want to run away. How? Experience. So right in my mind I was expecting large down close candle, large range. It should want to take out all this or like call it now stop loss or capitulation, like all the people that are buying here, and those who are breakout artists, like, okay, this is a short-term consolidation, breakout, they buy long. No, it will run them up. So both those ones who are trapped long here, the buyers who bought in here, and the short sellers who were right resistance, this is strong resistance, sell, put a stop loss here, they've been stopped out. Breakout long traders have been trapped, and those who entered earlier as long have been trapped. So the short ones who were right were manipulated. So you can see how price run. So that's why I drew this arrow, because I knew at this time price usually expand, and that was it. So I got a better pay to what I knew. I missed this entry because I did not discipline myself to get an exit here. So this was the take profit, and I was also almost doing the same thing I did with my limit at the take profit. But I then, okay, let me just focus on managing risks, and I increased my further potential again. There was it. And now, okay, no problem. Now I can sit still and watch how the trade pan out. So this was all what was going in my mind. I was thinking so fast and doing all this. For someone who's like, what are you talking about? That's just it. Just once you listen long enough, you'll be able to understand the price action. So this is how I come to, it's like a troll remark and something funny, like, I want you to come in here now, come to daddy. So, and you can see the execution label, you can see it. So it's not like, okay, replaying market. No, this happened. I'm just recording it to posting it to show what I'm thinking. You can see I took it out, I showed it again, because normally I just do a 1 minute version and people will be like, oh, they don't understand, but this is a better version. So I'm expecting it to come down. That was why I was shifting it. And in a few seconds, that was it. So it was a success. And that's a trade right there. Remember to subscribe, like videos, comment your thoughts and questions. So this is the walkthrough of the trade, and this is everything. So literally, this is also a remark like this must be random, right? Yeah, probably. So I took out it, I show it again. This is proving that this is real. I even hide the whole. You can see the chart is clear now, and I'm gonna reveal it again, so you will know that, okay, you can see that. So I just showed the price line. So have a great trading week and a nice